started? What do I need to do?
Just wait for confirmation and we're live.
Wait for whose confirmation?
Mine. Yeah, I just confirmed we're live.
Okay, I don't see it, but because
what do I need to do?
Right, okay, correct.
Just
okay, no, I had turned that on, so now it's turned off, so there will be no echoes. Okay, I think we can start then. If there are no objections, I will start. So, hi everyone, and welcome to the latest of the International Manifesto Group's Zoom panels on the US versus China, whose economy is winning. My name is Radhika Desai, and I'm the convener of the International Manifesto Group. I'm speaking to you from the city of Winnipeg in Manitoba, Canada, which stands on the stolen lands of the Anishinaabe, the Cree, the Oji Cree, the Dakota, and the Dene peoples, and is also the homeland of the Métis Nation. It is my special honor to moderate this event, whose exciting lineup of speakers includes my husband, Alan Freeman, and three good friends, Mick Dunford, Michael Hudson, and Michael Roberts. I share so many interests with all of them. I could talk to each of them for hours. So folks, I really think we're in for a treat. Let me tell you a little bit about why. A critically important part of the Cold War between the United States and China is being fought out over growth statistics and measurements, with the Western media and institutions such as the IMF constantly talking down China's growth and talking up that of the United States. While our speakers will shed considerable light on these realities, on the realities underlying these discourses, let me just set the stage very briefly by making a few remarks. I should add here that what I'm going to say is based on the analysis embodied in the manifesto, which our group has recently published, and I'm just going to put the manifesto's URL in the chat so that you can go and take a look at it if you are interested. Please consider reading it and signing it. It's already available in many languages. So again, including Chinese, Spanish, as you'll see, Italian, many other languages. So please consider signing it, reading it, and sending it to your friends. So to my remarks, Marx had anticipated, and a major constellation of later Marxist writers had analyzed how capitalism had already reached its maturity by the early 20th century, when it reached its monopoly phase. That maturity, it is well known, had also culminated in intense intercapitalist and inter-imperialist competition that led to the Second World War. One second, I'm just going to, oops. So let me just start again. That maturity, as is well known, had culminated in intense intercapitalist and inter-imperialist competition that led to what Arno Meyer called the 30 Years crisis, consisting or encompassing 2 world wars and a Great Depression. Thereafter, if capitalism witnessed a golden age, it was chiefly based on borrowing heavily from the socialist toolkit, running economies for full employment, creating the conditions for rising productivity and wages, expanding demand through state investment, and much else besides. Though even with such measures, there were many who remarked that the most stable and sustained growth was actually being experienced in the Soviet Union, even at that time. When, being what it was, that is crisis-prone capitalism, the underlying capitalist system nevertheless ran into a complex crisis of falling productivity growth, wage and commodity price pressures, falling profits and investment, and saturated markets, the West faced 2 choices. The capitalist West faced 2 choices: affirm the truth of the successes of the Golden Age and deepen socialist measures and reforms, or follow the siren song of intellectuals and think tanks supported by major corporations and consider the golden age to be the wrong turn, and instead free capital from the constraints put on it by societies and states and working classes, in the belief that these were the problems, the constraint were the problems, and released from them, capitalism would recover its productive dynamic. That was over 40 years ago. The record of those years is what our speakers will be examining. It has certainly produced a productively enfeebled, financialized, speculative and predatory, innovatively challenged, demand constrained, inequality ridden economy that caters to the needs of a narrowing elite. Today's speakers will examine the details of the actual achievements of the neoliberal turn and help us understand why socialism is once again on the horizon of humankind, more than 3 decades after the fall of the Soviet Union. So, with these thoughts, let me turn to our speakers. I will be introducing each speaker in turn. The order of speakers will be as follows. We'll have Michael Hudson followed by Mick Dunford, followed by Michael Roberts. We could have called it the three Michaels and a Alan panel, but nevertheless, here we are. And finally, we will have Alan Freeman. So that's the order of speakers. So let me begin by introducing our first speaker, Michael Hudson. Before I do that, I just want to make sure that, just one second, is the YouTube, Carlos, can you check if the YouTube is going properly? Because what I'm seeing is a blank tile with somebody's name on it who is not the speaker.
No, it seems to be fine.
Okay, great. All right, then. Great. So let me introduce Michael Hudson. Michael Hudson is a financial analyst and the president of the Institute for the Study of Long-Term Economic Trends. He is Distinguished Research Professor of Economics at the University of Missouri, Kansas City, and professor at the School of Marxist Studies at Peking University in China. Hudson has served as an economic advisor to the United States, Canadian, Mexican, and Latvian governments, and as a consultant to UNITAR, the Institute of Research on Public Policy, and the Canadian Science Council, among many other organizations. Michael has written or edited more than 10 books on the politics of international finance, economic history, and the history of economic thought. So, Michael, please, the floor is yours. Oh, I should add that each speaker will be speaking for about 15 minutes. I'll be a little bit flexible with them, but no more than 20. And then we will have questions and answers after that. So, Michael, please go ahead.
Well, I originally thought this was going to be a roundtable discussion and we'd just all be talking back and forth. So I didn't have a paper, but since I know I've looked at the rest of your outlines, and since you're going to be talking largely about the US vis-a-vis China and Russia, I want to talk about what the conflict is even more deeply about. And in all this discussion about Russia and China, the underlying rivalry is being fought over Europe and the East Asian countries that were conquered by the United States in World War II. And if you took a long 75-year perspective, the US aim has always been to prevent Western Europe and Russia from mutual economic integration. The last thing America wants is for German and French investment in Russia to help it industrialize. Same thing with China. The United States wanted China as a sphere of influence. The last thing it wanted was for China to integrate its economies with Japan, South Korea, India, and other Asian countries. The United States, therefore, is imposing an iron curtain around Russia and China. There's a lot of talk of the United States 800 military bases surrounding Russia and China. But what this has distracted attention from the economic sanctions and the Iron Curtain to say Western Europe and East Asia belong in the U.S. orbit, not that of Russia and China. And the U.S. diplomats have actually looked for some legal basis for this, and they have some archaeologists and anthropologists who've found the old map of Gondwana land a few 100 million years ago. The whole world used to be part of one continent all together before they began to separate. And what the U.S. Diplomats found is that Europe was really right next to Latin America, right next to the Caribbean. And so what they've come up with is a thought that the Monroe Doctrine really includes Europe, if you look at the long, big picture. Actually, Japan and China were very close to the West Coast. It was all one conglomeration. And the US has said, taking the big picture, they've always been part of our sphere of influence. So the circling of China is like this economic curtain. And if you look at the closing years of World War II, you can see how this whole US system of diplomacy was put in motion. From the Lend-Lease loan in the beginning of the war to the British loan of 1944, the main US enemy has always been England. Its aim of the British loan was to prevent England from using the sterling area to create demand for its exports. The United States insisted that the sterling area be untied to British purchases so that India and other colonies could spend the savings that they'd made during the war on raw materials to be spent on American exports and American grain. Once England was blocked from devaluing its currency, the aim was to prevent any industrialization on the part of England that could possibly rival that of the United States. And anyone who's ever bought a British car or motorcycle or other good knows that they fall apart and they're just utterly incompetent. The United States succeeded in its main rival, England, and then turned against the rest of Europe. France, Germany basically followed England into the World Bank and the International Monetary Fund that served as arms of US diplomacy. So the US drives to keep it as a sphere of influence also were applied to Japan ever since the Plaza Accords. You can see how Japan was willing to commit financial suicide, basically to flood the market with currency to support the Republican Party in 1988 to help reelect Reagan and Bush regime. And the result was the collapse of the bubble economy in 1990. The United States hoped to repeat all of this in Russia and China, especially after the Soviet Union declined, the whole idea broke up. The whole idea was to essentially treat it in the way that Senator John McCain idealized Russia, a gas station with atom bombs. The United States didn't want the atom bombs, but it did want the gas station. It privatized Russian raw materials, resources, oil, gas, nickel, and the plan was for these to be organized by the kleptocrats as stock markets. Russia was the world's leading stock market in the late 1995, 1996, made millions of dollars. And the plan was to buy out Russian oil, Yukos, with Michael Khodorkovsky. Essentially, America would end up owning Russia's raw materials, and Russia would be a gas station, but that gas station would be part of the US economy. That didn't happen. The last thing that America wanted was what Russia expected. Russia, under Gorbachev, said, okay, we're all unhappy with Stalinist planning. It didn't work. We're going to turn to the West. And instead, its hope was that of Germany and France, that they would integrate and that German investors, French companies would all set up plants and help replicate German, French, and modern industry, even US industry in Russia. Well, that's the last thing that the United States wanted, and that the United States was pushing a neoliberal economic doctrine, which was short-term asset extraction. The US plan was to grab the natural resources, non-industrial assets, but not to industrialize the country at all. Well, the Clinton administration, also in the 1990s, had a kind of similar plan for China. The idea was for it to become another Japan. It would finance its growth by borrowing US dollars. It would organize its industry as a stock market. like that of Russia, it would become a leading provider of financial gains for American investors, just like the stock market was a boon to US stock investors. US trade theory looked at China and other countries in a very simplistic way. It looked, every country has a natural advantage in either labor or capital, and China has a lot of labor, so therefore it's going to have an advantage in labor-intensive goods. And the good thing is, Clinton said, that by turning to China, we can break the American labor union problem. If Chinese labor provides our industrial goods, then we can lower the price of industrial labor for the United States. We can push down labor. The class war will be back in business. Their plan was simply for China to continue to produce low-cost labor, squeezing out profits that would be paid to stockholders that would be largely in the United States. And the idea was for the World Bank to help China put in infrastructure by providing the dollars for China to hire US engineering firms to build the infrastructure, and it would all be financed by the United States and in due course probably privatized and raise the prices. It had no idea at all that there was an alternative to this neoliberal plan. And of course, that's not the path that China followed. It industrialized the economy in much the same way that the United States and Germany did in the late 19th century, by heavy public investment in infrastructure, providing basic economic needs at subsidized prices, or freely healthcare, transportation, communications, to minimize the cost of living. This was the dynamic of industrial capitalism, but it's not the dynamic of the American-sponsored finance capitalism. So the resulting infrastructure investment of China contrasts very sharply with US infrastructure that's falling apart because we don't need it anymore now that we're deindustrializing. What do we need? Transportation, roads, bridges for. We can just simply afford to live in the short run and deindustrialize. Well, that's what's creating such distress among US economic strategists today. The US economy is post-industrializing. It's deteriorating. That's the root. That's what makes its opposition to China so desperate. It's finding that China and maybe even Russia are pulling ahead. Russia has displaced America as the world's largest agricultural exporter and grain exporter. China has displaced America as the leading industrial trader. Now, the normal course of affairs, if you're coming from outer space, would be, okay, now that Russia and China are pulling ahead, and now that Russia still needs more industrialization to follow the China path, it should probably integrate with Germany, France, and other firms, just like China had foreign, largely US firms come in and have technology transfer. The US plan is to block any technology transfer between, we'll call it Eurasia, Russia and China, and the surrounding territories that are now part of the Caribbean, part of the American sphere of influence. So what is at stake in these recent fights with China is a conflict of economic systems between socialist industrial system of China and between finance capitalism living in the short run in the United States. Well, obviously, if you have a long-term perspective conflicting with a short-term perspective, the long-term perspective is always going to win, because you're looking at the world economy as an economic system. But if you're looking at the world economy like the American strategists do, is how to make financial gains in the short term, you'll be sacrificing the short term for the long term. And the United States senses this. It doesn't know what to do about it. All it can do is impose sanctions and an iron curtain. And by doing this, it's brought into being its great fear. The great fear from Kissinger on, already in the 1970s, we were all talking about it. was that China and Russia would get together and in a mass that would economically, industrially, and financially, and militarily dominate more power. The question is, how does a shrinking economy like the United States, deindustrializing, behind in its military, it uses military as a kind of Keynesian giveaway. It's not a fighting military. It's a spending military and profit military, not ever intended to be on the battlefield, as you can see with the F-35 fighter that crashed while trying to land on the aircraft carrier the other day. So you have this competition, this not a competition, because it's we're talking about different economic systems, and the United States can't compete without industrializing. It can't compete financially. Its source of revenue, now that it's not supporting an economic surplus at home, how is it going to get it from abroad? It can't get it from the global south, because the global south already is using all of its export proceeds to pay the foreign debt. The foreign debt can't be paid, and the global south is now talking, in the wake of the coronavirus, writing down the debt. Well, the United States says, okay, write down the debts, include China's debt. But China says, wait a minute, we don't have any, we're not bondholders. We don't make financial investments in these countries. We make equity investments. We actually put in place physical collateral. Our debt is the physical plants that we're building. There are different economic philosophies that are in conflict, and that's what the press cannot recognize. It's what US diplomats can never acknowledge publicly, that there's a competition of economic systems, and the conflict is between neoliberal short-termism and industrial socialism, or as Rosa Luxemburg said, between socialism and barbarism.
Thank you very much, Michael. That was perfectly timed, I have to say, ending bang at 15 minutes. So that's fantastic. Next, and thank you for those very, very, I think, thought-provoking remarks. So I think you sort of set the stage by talking about the big picture. Our next speaker is Professor Mick Dunford. Mick is Emeritus Professor at the University of Sussex in England and visiting professor at the Chinese Academy of Sciences. Mick also is managing editor of the important geography journal, Area Development and Policy. So Mick, please go ahead.
Okay, I hope you can see my screen.
Yes.
Okay. I'm obviously very pleased to have an opportunity to speak in this meeting along such well-known public intellectuals as the other speakers. I'm going to speak largely about the Chinese economy, but if one looks at the US, one of the most striking characteristics of its evolution across the last 70 or so years, and indeed of G7 economies in general, is that the rate of productivity growth, the rate of labor productivity growth, has progressively declined, almost progressively declined. The cyclical movements are basically a long-term downward trend, which is indicative of extremely weak and deteriorating economic performance. Underlying this downturn is in part decline in the rate of investment. And that decline in the rate of investment reflects really what is a long-term decline in profitability that itself has been accompanied by a significant growth in financial assets as a share of total assets. So the broad macroeconomic evolution of the United States, and indeed of many other Western countries, is one that reflects increasing weakness in a sense, and increasingly ineffective growth performance. In the case of the US, you can identify four areas of economic strength in a way. I mean, one is the military-industrial complex. The second is control of the intellectual property norms, standards, and rules associated with the third and fourth industrial revolutions. And in those areas, the United States still exercises a significant degree of leverage, as it's applying at the moment in the case of semiconductors, for example. It enjoys exorbitant privilege as a result of the role of the dollar and as a result of its ability to set the rules of the road. Yet the rise of China, or the return of China, actually challenges all of these areas of strength. And China, for example, talks about the problem of a deficit of peace and is anxious to establish a world of peaceful coexistence, which in many ways challenges the role of the US military and industrial complex. China will almost certainly play a major role in setting intellectual property standards and in the next industrial revolution. So if, for example, one looks at the case of artificial intelligence, in that sector, China is one of the leading economies in the world already. But the impact of these new technologies really depends on the way in which they diffuse or the way in which they are applied. And in the case of the application of IT, China has enormous advantages, compared, for example, with the United States. A similar situation applies in other new sectors, in new energy. And China produces 75% of all components. And China accounts for, in this year, probably 60% of all the electric vehicles, right, that are sold in the world. So this ability, to diffuse technologies, is associated with high rates of capital accumulation, and it suggests that China will continue to sustain high rates of accumulation of capital. In other ways, yuan internationalization itself also, in a way, poses a challenge potentially, ultimately, to the leadership of the dollar, as does Asian integration, right, in relation to use of the dollar. And China's drive towards the establishment of a multipolar system similarly will place limits on the extent to which the United States is able to set the rules of the road in the global system. So in that sense, the rise of China does challenge in a serious way the leadership of the United States, but also its ability to sustain its leadership role and its dominant position in the world. If one looks at China's development, I think you have to remember that it reflects changing external geopolitical and geoeconomic circumstances. And it also reflects a series of reforms that were undertaken in China in order essentially to address the contradictions that arise at one stage of development in order to lay the foundations for new phases of growth. And if one looks at it in that way, you can identify a period in which China was embargoed by the United States and then underwent a split with the Soviet Union. But in that period, it undertook significant industrialization and made extraordinary social progress. In the early 1970s, as soon as the relationship with the United States started to improve, China immediately acquired, under Zhou Enlai and Mao Zedong, Western loans. It started to acquire Western technologies and equipment. And then in 1979, it embarked on reform and opening up. But in relation to reform, and in particular in relation to markets, Mao had said something very significant in 1975. He said, at the moment, our country employs a commodity system and the wage system is unequal. Such things can only be restricted under the dictatorship of the proletariat. So in 1979, China embarked on reform and opening up and participation in what was called the Great Global Circulation. But in 1982, it passed a new constitution, implementing the four cardinal principles. In 2012, one can argue that China then moved into a new, what one calls a new era, after the 18th CPC National Congress, and then possibly after the 19th Congress. But it was also strongly shaped by the fact that from 2011, the US embarked on this pivot towards the Pacific, and one moved in the direction of a new Cold War. So I want to say first that China's reform and opening up, which was really a path of managed globalization, was in certain economic terms extraordinarily successful. The chart at the bottom depicts the rate of growth of China in the first 30 years up to 1980, and then from 1980 to 2020. And you can see that China grew at 6% per year in the first period. The rest of the world, excluding the Western world, grew also above the world average. But then from 1980 to 2020, China grew at 9% per year through that period on average. The rest of the world, excluding the West, grew less at a rate that was less than the world average. So you can see that while, in a sense, the rest of the developing world fell further behind, China made extraordinary economic progress. So in that sense, this process of managed globalization was extraordinarily effective. But it involved a model of development that involved specialization in dependent, labor-intensive, largely processing industries. These activities were highly profitable for multinational companies, but it was a path that differed quite significantly from the planned economy in which China chose its own industries that it thought at that stage had significant potential. It was also the case that in this period, China initially accumulated large trade surpluses and of course was a recipient of large inward investment, but it also accumulated huge reserves. And these dollar earnings were largely invested in US Treasury bills that yielded extremely low rates of return for China, in part because it was not really allowed to purchase the kind of plant and equipment that it might have wanted to develop its own industrial capabilities. As far as the present situation is concerned, I mean, we know that just this last year, China grew at 8.1%. Its growth actually slowed in the last quarter due to property market reform, due to its zero COVID policy, due to electricity shortages and high coal prices. But the forecast suggests that China's growth in the next year or so is going to be well ahead of that of the United States, and that it will very soon, quite conceivably, escape the middle income trap, even though, you know, the World Bank has argued that certain reforms that would be necessary in order to escape the middle income trap are reforms that China has simply not implemented. And actually, in many respects, it's moved in the opposite direction. But basically, you know, if growth in China exceeds that of the United States by about 1.5% per year, then by 2030, China will certainly be the largest economy in the world. So China's strengths lie to some extent, or to a significant extent, in its particular economic model. And a number of those characteristics of that model need to be emphasized very strongly. One of the first is that China has a very significant state or collective sector, which accounts for something like 36% of investment. The chart on the right actually plots state-owned and collective enterprises' share of total investment. And you can see, even though it's actually declined from the start of the new millennium, it's well over 1/3 of total investment. Alongside that, China enjoys monetary sovereignty, state development banks, a largely public financial system, planning system, a public innovation system, a system of land use rights assignment that drives growth, and until 2012, undertook no significant capital account opening. Growth and development, secondly, is of course market-driven but government-guided. You know, in recent years, the Chinese government has used industrial guidance funds worth 11.4 trillion RMB. Since 2000, China has established a significant presence in a series of medium technology industries, but of course its goal now is to move also in the direction of high technology, with measures designed to promote strategic emerging industries, new growth drivers, to nurture new sectors. And the aim is to concentrate on core technologies where China will secure control in its own hands, in part as a consequence to the aggression that it is confronted from the United States and to some extent from other Western countries. Its rate of accumulation will also continue because of urbanization. Something like 200 million people have yet to be urbanized and will be urbanized. And as they do, there'll be large investment in new infrastructure, 5G, sensors, smart grids. And there will also be programs of rural vitalization, rural-urban integration, which are closely related to a new strategy of dual circulation. So there is a series of factors which suggest that China's rate of accumulation and growth will continue to be relatively fast. These policies of marketization, globalization, privatization were, however, associated with the emergence of a series of quite significant problems. One was a very strong increase in rural, urban, regional, and social inequalities, which are plotted in the charts on the right. They were also associated with significant environmental damage, with increases in the number of mass incidents, and also with a whole series of cultural evolutions that were considered extremely negative. So in 1999, the Chinese government started to re-emphasize the notion of common prosperity. And it undertook a series of major counter-cyclical debt-funded investment projects that drive growth. So 3.6 trillion for the development of the Western regions, 2 to 3 trillion for old industrial areas in the Northeast, 2 to 3 trillion for central regions, over 10 trillion for the new socialist countryside from 2006 to 2015, 2 trillion on post-Wenchuan earthquake reconstruction, 4 trillion for emergency market bailouts after the financial crisis. And at the same time, more recently, supply-side reform alongside job creation, which involves, in a sense, a process of planned creative destruction. But China also, had started to open to financial capital, foreign financial capital, as a result of its entry into the World Trade Organization in 2000. And in 2015, it spent 1.7 trillion to bail out the stock market. And then in August in 2015, after the renminbi exchange rate reserves declined by 1 trillion. And at least 500 billion of that was associated with protection of the exchange rate. And after that, quite much stricter foreign exchange and foreign investment, outgoing foreign investment controls were established. So you can see that, what I've emphasized is that China made absolutely extraordinary progress. A progress that is really unprecedented in history as a result of reform after reform and opening up, but it generated a series of problems. These capital investments in Western regions, in central China, played a significant role in starting to reverse the regional inequalities by 2010. And similarly, the rural-urban inequalities started to diminish after the end of the first decade of the new millennium. Then in December 2020, Xi Jinping called for a curbing of the disorderly expansion of capital. He called for a strengthening, basically, of domestic demand, for a move in the direction of ecological civilization. On August the 29th, 2021, Guangman Li Ice Point commentary, it was entitled "Everyone Can See the Critical Changes Taking Place," was republished in state-owned media, and it said, "The market will no longer become a paradise for capitalists to get rich overnight. The cultural market will no longer be a paradise for effeminate stars, and news and public opinion will no longer be in a position of worshipping Western culture." Recently has been accompanied by a crackdown on the tech sector, on the platform economy and other monopolies, on real estate, on the financial capital, on owners seeking to get rich by going public on foreign stock markets, and on wealthy elites. Housing and education, it was said, had been hijacked by capital. So the costs of education and health have exploded. They've created three mountains, whose rising costs and declining affordability crowd out other types of household expenditure and limit the development of dual circulation, nationally discourage Chinese people from raising children. So these issues are leading to reform of primary, secondary, and tertiary income distribution system, and trying to establish income streams through multiple channels, establish high quality employment, lifelong education, collective wage bargaining, and increased labor compensation. Alongside that, China has embarked on this strategy of going out, which of course in part involves a different use of its foreign exchange reserves. Is involved in inward FDI, but also now significantly in outward FDI from about 1999. After the financial crisis, it's been involved in currency swaps, particularly in East Asia. In 2013, established the Belt and Road Initiative, established the New Development Bank, the Asian Infrastructure Bank, and so on. And China has engaged in a significant extent in international lending. The charts on the right actually depict the growth of Chinese lending to different parts of the world. So if I just try to come to some conclusions, what I've in a sense indicated is the deteriorating performance of the United States and indeed of Western economies, reflecting underlying trends in profitability. And then I've argued that China is quite likely to play a significant role in relation to the technologies of the Industrial Revolution, and that for a variety of reasons, one can envisage continuing high rates of capital accumulation. So, as Gunther Frank and Giovanni Arrighi argued, the unipolar system of Western hegemony is in decline. Asian preeminence up to the voyages of Zheng He will return in the shape of a polycentric order in which emerging countries help shape global rules. This is Renlei Gongtongti, a community of common destiny for mankind. Second, the liberal capitalist system, it seems, cannot address core contemporary governance and economic challenges, and its international legitimacy has declined in the face of the challenge of civilization states. Neoliberalism and neoliberal globalization have run their course, eliciting deglobalization and a reassertion of sovereignty. And at the same time, one can see the beginnings of a new path of inclusive South-South globalization and regionalization, of which RCEP is an example. A new technological revolution is approaching, and it is capable of dealing with global challenges, but exploiting its potential requires coordinated action. China itself will embark on the path of common prosperity. It will ensure continued accumulation and growth for some time to come and lay the foundations for a new phase of common development. Okay. Thank you.
Thanks so much, Mick. That was really great and so informative. It always amazes me how well you know both the Chinese economy and the discourses that drive its direction and so on. So thanks very much. The discourses, the policies, etc. Before we go to our next two speakers, I just wanted to say that we will have, after the speakers are done, a question and answer session. And depending on how many questions there are, we will either take them singly or we will group them into 2 or 3. So please prepare your questions and please be ready to raise your hands, and I will call on you in the rough order in which I see your hands up. So, okay, so let's go to our third speaker now. Michael Roberts is, I think, very well known to lots and lots of people. He's, I would say, one of the star economist bloggers from the left. Michael has worked as an economist in the City of London for various financial institutions for over 40 years. In the heart of the beast, as he likes to say. He has written several books, including The Great Recession, a Marxist view, which was about the 2009 crisis, which I like to call anyway, the North Atlantic financial crisis, not the global financial crisis. The Long Depression, which was published in 2016. He jointly edited The World in Crisis in 2018. Marx 200 was an authored book in 2018, and Engels at 200 in 2020. He is joint author with Giulielmo Carcedi of a forthcoming book to be published by Pluto Press called Capitalism in the 21st Century Through the Prism of Value. And as you know, his blog is called The Next Recession, thenextrecession.wordpress.com. So Michael, please go ahead.
Well, thank you, Radhika. Good to be here. I'm going to make some similar sorts of comments that Mick has made before, overlapping, but also perhaps complementing and looking at some new angles on the differences between the Chinese and the US economy and what direction it's going. I think it's good. I'm coming after Mick as a graduate of Sussex University. He's still down there. Of course, he's not teaching me because I was not there. Well, probably in the 19th century was the last time I was there. However, let me share some graphs like everybody else. Let me just get that on the slideshow. Oh, I haven't done that, have I? Hold on. Do the share. There we go. All right. That's the title of our session in short. And let's start off. I'm going to give you a series of categories, economic categories, similar to Mick. His is much more comprehensive, but perhaps I've got some more other ones that we can look at and consider. The one that most people start with and in the media is the size of GDP between China and the US. Who's winning on this? Well, if you measure it on the IMF and World Bank purchasing power parity level, already China is the largest economy in the world. You can see that it crossed over in about 2016, 2017 on the basis of that measure in dollars of billions. And if it continues the current rates of growth between the two countries, as Mick said, then it will be way ahead of the US by the time we get even into the middle of this decade. But I don't think that's a very accurate way of looking at it. I think we should look at the relationship between China and US GDP terms in terms of market exchange rates, because that's where international trade, investment, and so on is really measured. And if we look at it in terms of dollar market exchange rates, then we can see that the US is still ahead. So you could say the US is still winning, but you can see the gap is dramatically closing between the US and China on a market dollar basis. If you go back to 1980, the US GDP on that measure was 16 times larger than China. And now it was 30% larger at the end of these second decade of this century. And as we get to 2026, the gap will continue to narrow. Similar points, I think, that Mick has already made in this position. So shortly, by the end of this decade, if not earlier, China is likely to be the largest economy in GDP terms in the world. And as Mick has pointed out, the growth rates, if we take from post-COVID, also show the dramatic advantage that China has got over the US. In the period 2019 to 2021, which is the COVID period, if you like, Chinese growth was just over 10% over those 2 years. The growth of the US was just 2%. So the average growth per year, 5% plus in China during a COVID slump. And in the case of the US, barely 1%. And of course, that was all in 2021, the recovery. And only the US, amongst the G7 economies, has actually managed to get above the level of GDP that they had in 2019 in real terms. All the others are still below. And then if we look at general forecasts being made by international agencies about growth in China and the US on the right-hand side, you can see over the next 5 years, China is expected to continue to grow at around about 5%, which means nearly 30% increase in real GDP over the next 5 years, while the US, which is one of the better economies amongst the capitalist West, is going to be growing at less than 2% a year, or just 13% in the next 5 years. So that's why the gap is closing all the time. That's why the faster pace of GDP growth exists in China rather than in the US. Of course, that's total GDP. And with a population of 1.4 billion in China compared to about 350 million in the US, you could say, well, that's not a fair comparison because the GDP population of China is so great that it drives up GDP to such high levels. So if we look at GDP per person compared, we still see a massive increase in GDP per person in China. This is the Chinese rate of GDP per capita relative to the US. And you can see as we've just entered the COVID period, it had gone up to nearly 25% of the US, but still only 25% of the per capita GDP of the US, 1/4. So there's still a fair way to go if we want to talk about China winning in the sense of having, if you like, GDP per capita as a sort of crude measure of living standards on average between China and the US. How long would it take to catch up? How long would it take for China to reach the point where it was actually winning on a per capita basis? Assuming the growth rates that we've talked about for per capita income previously and what is likely to happen over the next few decades, it would take basically to the end of the 2060 to reach 100% of US per capita income. Most G7 countries are around about 80% of this. And so if you got even up to the G7 level, we're talking about another 30 years on the current rate, despite the very fast growth of the Chinese economy compared to the US economy. So there is still some way to go before you could talk about China reaching the living standards and conditions of a modern advanced capitalist economy at the moment for its very huge population. But there are other measures of what matters in the world for humanity rather than just GDP. One of the most important ones, it seems to me, for humanity is how long you live and life expectancy at birth. If you can see this orange line here is China's. Back in 1980, the average person born in China was likely to live just 45 years. That has been dramatically transformed to 75 years here as we before the beginning of COVID. What was happening in the US, that's the top line here. You can see that it was 70 years back in 1960, way, way higher than China's. But now in 2020, 2019, it's risen to just about 77 years. And in fact, if you look very closely, you can see there's been a decline in the last few years. During the last decade, life expectancy in the US is falling as a result of some of the things that Mick has mentioned and the inequities and changes that have taken place, rising inequality, rising very high poverty in capitalist economies in the US and so on, the extremes of income and wealth, and all the other health problems that exist in that US economy. So I like to look a bit wider. If we look at the World Bank's Human Development Index trends, which I think will offer us some useful guidance. The Human Development Index trends are measured at the bottom here. This is the World Bank's attempt at key dimensions of human development, a long and healthy life, being knowledgeable, having a decent standard of living. They index this in whatever mythical way you want to do, but let's just take their figures, even if you find them perhaps a little weird. But if we look at them, we can see that the US in 1990 scored 86.5, 0.865, compared to China really on just 0.5, a huge gap between those two economies. But by the time we get to just before COVID, the US is now on 0.926, so apparently human development has improved in the US in that period of 30 years, just by 7% on this index, while China has gone from 0.5 to 0.76. It's had a 50% plus increase in the Human Development Index as set by the World Bank. Nobody can compete with that movement upwards. And now China at 0.76 is higher than the world average, and it's not so far behind the position of the OECD countries. It's closing the gap with the OECD, which is on 0.9. It's way, way ahead of India, which it was fairly close to before, and it just overtaken nearly now Brazil and other countries which had much higher levels of human development back in 1990. So even on that measure, we can see a dramatic improvement and the gap closing for China across the world against other countries. What's going on? Let me get this right. Yeah, so one of the big issues figures that's always raised is the level of poverty that exists in various global South economies. And as we know, anybody who's looked at the data or considered the media, even they have to admit it, there's been a dramatic reduction in the level of poverty in the Chinese economy amongst the Chinese population over the last 30 or 40 years. The World Bank has different poverty levels. I've chosen a slightly higher one than their ridiculously low $1.9 a day as a poverty level. If you take the level of $5.50 a day, still rather pathetically low, we can see that amongst emerging economies, China has only 30% of its population living at below $5.50 a day. Way, way lower than peer global South economies that I've listed here. That compares to just 2% in the US, but this level of $5.50, of course, is a very low level indeed when it comes to the advanced capitalist countries, so they don't really score on this poverty rate. But when you're looking at the situation, we estimated something between 900 million Chinese have moved out of the level of poverty as set by the World Bank during this period. Unprecedented in the history of humanity, I think, in that sense. But is it going to continue to close the gap with the United States and the advanced capitalist countries or not? If you look at these quotes on the left-hand side, this is what some important capitalist strategists claimed in the last decade. Robert Zoellick, former World Bank chief, said, as China leaders know, the country's current growth model is unsustainable. That's what he said in 2012. Here we are nearly 10 years later. George Magnus, the well-known investment fund manager who spends a lot of time critiquing the Chinese economy, said that China's government will stifle incentives and innovation and make it even more difficult to generate productivity growth that all high middle-income countries need to avoid the middle-income trap. He said that in 2018. Mick Dunford has just shown us that actually it's about to leave the middle-income trap as set by the World Bank. Perhaps a more realistic position is to look at Arthur Kroger, head of research at Gabakal, which is in China. Is China fading? In a word, no. China's economy is in good shape, and policymakers are exploiting this strength to tackle structural issues like financial leverage, internet regulation, and the desire to make technology the driver of investment. But one of the big issues that's raised is that China is running out of people. Mick has pointed out there's still a lot of rural workers that have been urbanized and brought into the new industries that China is developing. But the total number of employed people does appear now to be falling, and falling from a peak just about at the beginning of this particular decade, and we're heading downwards, if rather slowly at the moment. So there's two ways in which growth of GDP can take place: is more people producing more, and those people producing more per person. If the number of people is going to decline, then you need to increase the productivity of that labor force. It's a simple arithmetical thing, but what's involved in the actual process is more important. On the right-hand graph, you can see that actually China averages something like 4.5% to 5% productivity growth over the period of the last 30 years, compared to the advanced capitalist countries, which are under 2% per year and eventually zero when we come into the period of COVID or just before. So what that tells me, if that continues at the moment, that gap, then labor productivity growth of 4 or 5% in China, even if the employed workforce declines a little, will continue to outstrip the growth in the advanced capitalist countries and continue to maintain probably at least something like 5% real GDP growth over the next period. And what does that mean? That means it also means if the drive is there with a drive of more productivity, then you're going to get the drive up in wages and living conditions for the bulk of the population on average across the board. Productivity and real wages are usually quite closely connected, even if there's an attempt to hold real wages down while productivity grows by capitalist governments and economies. And here we can see, just in the period of the decade before COVID, China's productivity rose by 73% in that decade, and real wages rose by nearly 70% as well. That is absolutely staggering, contrary to the view that in some way the gains of productivity and production in the Chinese economy do not spread down to the average Chinese worker, urban worker at least. In India, we've seen quite a large change in productivity too, 46%, and wages also matching that, but still way short compared to China. But if we look at the advanced capitalist countries, the UK and the US, it is totally pathetic. Productivity in the UK in the last decade, just 3.5%. Wages up by 7% over 10 years. Actually, it's the slowest growth in real wages in the history of British capitalism in the last 10, 20 years even. The US, only a little better, 11%, and just a tiny 11% in real wage growth. That's approximately less than 1% a year in real wage growth. And some of the peers of the emerging economies, India, apart from India, Russia, South Africa, and Brazil, in a terrible state when it comes to looking at productivity and real wages. Trade and technology is key for the next couple of decades. And China maintains a huge share of manufacturing, which the top left graph shows, 30% compared to the other major manufacturers in the world. Its other manufacturers rely on Chinese imports to carry out their manufacturing. German cars aren't built without Chinese imports and vice, so we can see the huge import content required by German manufacturing from China, as opposed to other countries like the US and Japan. The similar situation, even higher in the case of US manufacturing reliance upon Chinese imports, and Chinese reliance on US, Japanese, and German imports as a relative to their manufacturing output and exports continues to decline. So in a way, China has maintained that independence through world trade, despite the huge integration and globalization that's taken place over the last 20 years. Here is a graph I just wanted to present because it's often claimed that China is already an imperialist country. But I've done some research with Guillermo Carcedi recently, which shows that if we look at the transfer of surplus value, profit, if you like, through the process of international exchange, countries, the rich monopoly, high technology countries extract surplus value out of the poorer global south, less technology countries. In the case of China, which is obviously more technology developed than many other global south economies, nevertheless, because of the US and the other imperialist powers' monopoly position on technology and also on their position they try to control, they are extracting in surplus value in trade with China something like 5 to 10% a year of GDP out of the process of international trade between China and the advanced capitalist countries. That tells me that China is not the great imperialist exploiter that some claim. Quite the opposite. It remains like many other global south economies facing the extraction and exploitation by the imperialist bloc. But having said that's economics data, what about other factors which affect China? And they are, you can see, this is Tony Norfield's World Power Ranking to give us an idea of which countries are dominant in the world. Obviously, on his measure, the US is at 90, and that includes military spending, international banking, foreign assets, and control of the currencies, and of course, GDP. When we look at China's share is second, apparently, at 38, but most of that is due to GDP, its control of its own foreign assets, and its banking control, but it really doesn't have military power against the US. We know that the US military spending is greater than the whole of the rest of the world put together, its military spending. And that's where the US maintains its winning position on its ability to apply military force or the threat of military force, its ability to cut off financial assets and flows to countries, particularly the countries of the third world, if countries step out of line, as we're seeing in the current dispute in Ukraine. Just want to make a couple of other points quickly. Internal contradictions exist in China. I think we ought to say inequality is great, as Mick showed as well. But this is inequality of wealth. As you can see, it's very high in all countries, inequality of wealth, ownership of property, assets, financial assets, and so on. It's around 70 on the Gini coefficient in China, which looks very high, higher than Italy and France. But look at Brazil at 89 or the US at 86. they're way, way more unequal. If we look at the wealth share of the top 1%, Brazil at nearly 50%, the US at 35%, China is high, but it's still lower than those countries and lower than many other countries. Yes, the rich are getting richer in China too. And that is one of the things that Mick was bringing out. Billionaire wealth, the percentage of GDP, has rocketed in places like Russia, Sweden, and so on, but also in China, which is now around 15% of GDP, billionaires. That compares to Russia's nearly 40% of GDP, where the crony capitalists live. And as the quote on the right says, from Xi, that we cannot continue to compare this wealth gap to become an unbridgeable gulf. And we cannot afford to wait to do something about it. Mick was mentioning some of the things that was attempted to do. I just like this quote from Xi last summer. He said, the Soviet Union was the first socialist country, enjoyed a spectacular success, but it collapsed, mainly because the Communist Party, the Soviet Union, became detached from the people and turned into a group of privileged bureaucrats concerned only with protecting their interests. If a governing party turns its back on the people, it will imperil the fruits of modernization. So that's the warning that China's leader is giving. Whether he can deliver that remains to be seen. On the other hand, you can take another option for China, that of Jack Ma, where he says Chinese consumption is not driven by the government, but by entrepreneurship and the market. In the past 20 years, the government was so strong. Now they're getting weaker. This he said in Gen 219. It's our opportunity. It's our showtime to see how the market economy, entrepreneurship can develop real consumption. So there are the two views about what direction China should go and the contradiction which exists. So the US is still ahead, but the gap is closing. The US is way ahead on GDP, and the gap won't close for decades. But China's growth rate is triple the pace of the US. COVID deaths, China 3 per million, the US 2,600 per million. That's the result of the COVID battle. Life expectancy, nearly the same. Human development, China closing the gap. Employment growth, China has no growth, maybe in employment, but the US is not much better. Productivity, China 4 times, if not 5 times faster in the past period. Wage growth, 7 times faster than US wage growth. Poverty, yes, China still has much more poverty, at least on the World Bank measure, than the US, but it's done the best of all the global South economies. Equality of wealth, high, but less than the US. Billionaires, high, but less than the US. Global power, still relatively weak compared to the US. That last one is why we have this battle in the 21st century ahead of us. The US misses to maintain its global power, even though it's losing ground on all these other factors.
Thank you so much, Michael. That was absolutely fascinating. And as I said to everyone, we were in for a treat, and I was not wrong, even though in some ways, Mick and Michael's presentations overlapped, Mick and Michael Roberts' presentations overlapped. We still learned a lot of very distinct things from each of them. Okay, so finally, we have our last speaker, Alan Freeman, co-directs the Geopolitical Economy Research Group with me. He was an economist at the Greater London Authority between 2000 and 2011, where he held the brief for creative industries and the living wage. Alan wrote The Ben Heresy, biography of a British politician, Tony Benn, and has co-edited 3 books on Marxist value theory. He is honorary life president of the UK-based Association for Heterodox Economics and a vice chair of the World Association for Political Economy. So, Alan, please go ahead.
Just to check, can everybody see my screen share?
Yes.
Now, in response to some of the points that have been made in the chat, I am going to be talking about growth, and I am going to be talking about GDP. But let me explain why. It's not because it's the be-all and end-all of achievement for any society. It's for 2 reasons. One is this is what the American and Western commentators keep focusing on. The explosion of claims that the USA was making it out of the pandemic with 5.1% annual growth, which I'm going to look at in a minute, is all focused on US growth because that's the God the altar at which the capitalist class worships. I would say that's not the altar at which China's government worships. We've heard about the importance they attach to the reduction of poverty. They're leading the world in the battle against ecological devastation and the development of sustainable energy and sustainable production. The issue of cultural development is extremely high in education, just to take a single instance. Now, I'm having to admit people, so I hope somebody else can start with that. It is astonishing. I think one of the things that has not been mentioned, which is actually very important, is the rate of scholarization, particularly in tertiary education in China, which has no parallel. So, sorry about the phone. I'm talking about growth precisely because it's what they boast about, but it's also the cause. I'm against gravity. I would like to fly. But unfortunately, gravity imposes itself on me. So if I wish to fly, I have to work out how to take measures to overcome the law of gravity. Under capitalism, growth and its consequences are what drives the fact that we cannot have the desirable things that we want. So I want to stress there's no moral context in what I'm talking about. I'm not saying growth is the be all and end all. I am saying it is the major causal factor in what's happening in China and in America. And I want to begin with refuting a couple of claims which I think are very seriously misleading about the US economy. I'm going to be focusing on the US economy. And the first of these is the proposition that's put forward by, I think, Graham Allison.
Alan, I just have to let you know, I have a request that you should speak louder because I think some people are not able to hear very well.
Okay. Can you hear me? Is that any better? It's really not the volume. For some reason where the microphones become problematic. Yeah. This often happens. Maybe I should change my microphone. Do bear with me. No, I'm on my system's microphone. I'll just speak as loud as I can. Okay, I'm very sorry about that.
That's better.
Okay,
that's better. Mm-hmm.
Very good. So Graham Allison advanced the idea of what he called the Thucydides trap. I'm sorry, but people will have to stop phoning in if anybody's doing it because they don't like what I'm saying. Please desist because it interrupts the presentation. Next time I'm going to leave it to Radhika to answer the phone. So the idea of the Thucydides trap is based on the Peloponnesian War in Greece, in which the war was attributed by Thucydides, the historian of that conflict, to the rise of Athens. So his view was that Sparta was the dominant power, China, that's what he makes the analogy with, but Athens rose, and that provoked the war. This is a very dangerous philosophy, in my opinion, and it has an audience in China itself, because it leads to the conclusion that the only thing China can do is submit to the requirements of the US not to grow so fast. It also leads to the very dangerous conclusion that war is inevitable, which I strongly believe is not the case. And one of the main things I'm going to be talking about is the specific role that war has played in the evolution of the US economy and why it is leading the US economy on a downhill path from which it cannot escape, and why a new world vision of how international peace and security can be secured is absolutely essential, in particular for figures with any influence in America's government. So I produced a chart in which I asked a very simple question. First of all, has the US share of world growth shrunk? And it has. You can look at the graph on the left and you can see that it's lost ground. That's the white band in the middle of this sort of Italian flag graph here, where you can see that it's lost ground for the global south. That's the countries other than Russia and China and the imperialist countries. And it's lost ground to China. But then I asked a very simple question. And this is the right-hand graph. What would have happened if the North as a whole, or the US, if they grow at very similar rates, had simply carried on growing as fast as they did in 1970? And the answer is there would have been practically no change. A little bit of advance by China, but certainly no loss by America. So the point is a very simple one, that the crisis that America is going through is self-inflicted. America is responsible for its own decline. And therefore the responsibility of China, Russia, and socialists everywhere, or progressive people everywhere, people who value the future of the human race, is to prevent America continuing down this insane path on which it is bound. Now, the next thing, now, of course, what happens is that I find I can't move the slides forward, which is always the problem. Ah, yeah. Okay. There's a lot that has been said about the spectacular recovery of the US economy in the last quarter of the pandemic. So I did something which any economic student of statistics should do, which is you look at the average over a reasonable period. It's always possible to take a period which makes you look good, which is what the commentators do, and trumpet that as being the reality. The period over which I usually take average is either 4 years, which is half the length of a typical recession, or 7 to 10 years, which is the length of a recession. This is the average rate of growth of the US economy over the past 4 years. And there are two things that you will see that I want to draw your attention to. The first is it's gone through a very long decline, which started in 1950, shows no signs of ending. And the second is, this is not a recovery. If you look at this red line, I don't know whether you can see my mouth or not, this is the last set of data released yesterday by the Bureau of Economic Analysis. The four-year average rate of growth is still below 2%, which is about where the US economy has been since 2008. And there's no sign of any general recovery in the behavior of the United States. And I felt this was so important that I was recalling a famous quotation, the mountains roared and produced a ridiculous mouse. So we now have a great roaring of mountains and a ridiculous mouse, which is this 1.8% average growth. And I looked it up, and it was actually a quotation which is attributed to Horace, the Roman lyricist. And I went back and I looked at his actual original. I was so incensed, I went back and looked at the original Latin, not something I do very often. And I found that it's extraordinary. Not only did he make this quote, but he's directly talking about the fact that people who are engaged in a previous war after a long gap are promising great things because of what they did in the war. And he says, after all this roaring, all you get is a ridiculous mouse. So on to this long decline. I think insufficient notice has been paid to the historic character of the decline of the USA. And I want to draw attention to the fact that this is shared by all countries of the global north, roughly the same bunch of robber baron countries that Lenin identified in 1907, which were then the imperialist countries, and which has hardly changed at all. It's also a very important historical fact. It's had perhaps the addition of South Korea, maybe Malaysia, maybe Singapore, certainly not Malaysia. That's it, okay? So the average growth of the North as a whole has declined systematically since 2019. This is the longest historical decline of capitalist nations in all of history. There have been these so-called Kondratiev waves that in 1870 there was the Great Recession, which lasted maybe 20 years. The 1933 Great Recession lasted basically until 1942, as we'll show. America recovered from that through the war, not through the New Deal, another piece of mythology. But this has been going on for 70 years. There is no parallel in history for it. And I think insufficient care is paid in dealing with that. So the next point I make is a very simple one. What really got the US out of the recession? And here you see the share of government spending in US GDP. Now, what is particularly noticeable is this bump, which starts in about 1939 and ends in 1947. That was wartime spending. So the government, the great enemy of US business, actually rescued the US economy massively from the Great Recession. It was not the New Deal that did it, it was the war. And that, of course, shaped the entire structure of the US economy, which is still with us today. The next thing is, I've titled this sort of musingly, I'm still having to admit people, a very socialist war, named after the play some of you remember, A Very British Coup. This is the share of US public investment in total investment. And by the middle of the war, 85% of all investment in the USA was being conducted by the government. And if you add up, I haven't done it, but I'm sure if you do, add up the total amount of money that went into the US economy between 1939 and 1945, you'll find it's at least as much as the total of investment from the private sector in the next 30 years. So it was the government with its wartime intervention that produced the great burst of growth that put the US at the head of the world economy and gave it the leverage that Michael Hudson has referred to. Now, once again, I wish it wouldn't do this, but I find I can't move forward. The next thing one wants to look at is something happened around in the 1970s. There was a great slump. It was called by Mandel the second slump in 1974. And at that point, as Radhika has said, basically advanced countries faced a binary choice. One was to go down the road suggested by the Brandt Commission, an attempt to develop the global south, expand the welfare state, and use the resources of the government to ensure that that happened. They did not do that. Instead, they embarked on neoliberalism. And this is the real story of neoliberalism. It started in the 1970s. And what I want to draw your attention to is the different pattern before the 1970s and afterwards. Before the 1970s, investment is moving in synchronization with growth. So public spending, it's driving growth. Afterwards, it goes in the opposite direction. And I call this proactive and reactive. Before the 1970s, particularly during the war, it was government and particularly government investment, which was driving growth. After the war, it was responding to the failure of growth. So whenever there's a slump, the causal relation is reversed. It's the slumps that cause the government spending, because then they have to inject a lot of Keynesian fiscal stimulus, whether they admit it or not, they always do it. And so you have this alternation of expansion and government spending. What is the real cause of the US decline? It is the decline in investment. I just urge people who dispute this or have doubts about it to simply do the numbers themselves. And in fact, it's so outrageous that people don't do this, that I've created a site where you can access economic data, and I've produced a tutorial, which you can find on academia, on how to use government data. Because I think everybody should be able to do this. It's been said that we should circulate the slides, which we certainly will. But what I would love is if everybody was capable of producing those slides for themselves. Just as, you know, in the earlier stages of the advances of civilization, everybody was supposed to learn to read and everybody learned to add up, the Victorian 3 R's. Well, it should now be 3 R's and an E, which is reading, writing, arithmetic, and economics. And I think universal economic literacy would allow people to see the sense of what I'm saying for themselves. But GDP growth is totally related to the share of investment in the economy for many reasons. First of all, it's a big chunk of spending. It's 27% of spending, between 21 and 27%. It's a big component of GDP itself. But secondly, it's only if you invest that productivity increases. And productivity, as was said, as Nick pointed out, and I think Michael Roberts pointed out as well, it is the driver of growth alongside the growth of the workforce itself, which is slowed in the cases of all the economies now under investigation. So it's investment. But what happens to investment when finance comes along? And this one is a very interesting graph. It shows the acquisition of financial assets as a proportion of total acquisition. Now, those of you who follow David Harvey will notice that he's published a long article in New Left Group. I know nothing against David Harvey, but the article makes a distinction which I think is very misleading between the rate of profit and the mass of profit. And the argument is that because the mass of profit is increasing, the capitalists are in a very good shape. The rate of profit doesn't matter. A very common point which is made against Marx and Marxism. When you finish wrongly proving that the rate of profit doesn't fall or cannot fall, then you end up saying, well, it doesn't matter. because you're just determined to say that capitalism is not responsible for its own problems. What actually happens is this: as the rate of profit declines, and we're going to see this in the next slides, the capitalists no longer think they're going to get such a good return by investing in production. They get a better return, particularly with an economy situated in the world economy, as is the US economy. They get a better deal by buying speculative financial assets. So this simply shows, after 1980, essentially the rate at which the capitalists were acquiring financial assets as opposed to productive assets, doubled from 40% to 80%. So 80% of US profits went into buying speculative, useless, unproductive assets. And that's what led to the crash of 2008. And that's what's leading to the present crisis. Nothing to do with the rise of China. And here's the totals of financial and productive investment assets of the USA. You can see productive investments utterly dwarfed by financial sector funds. This also has a big effect on the profit rate. And I'm going to put this in at this point because there's been a very long debate about the profit rate. And so it's taken 3 stages. First of all, to say it's impossible. Second, to say it isn't happening. And the third, to say it doesn't matter. Well, it is possible. Marx was absolutely right. It is happening and it does matter. And the argument that it's not happening is based on a very simple error, that when people calculate the denominator of the profit rate, that is, who has a claim on profit, they only include fixed assets. Now, it's obvious when you think about it, this cannot be right. What would an economy that had almost no productive assets at all look like? It would be the most fantastically profitable economy in the world. And in fact, I took the United Kingdom. If you calculate the rate of profit in this way, it looks as if the United Kingdom profit rate had a spectacular recovery after Thatcher. Of course, it did nothing of the kind. What happened was that the capitalists were switching from buying productive assets to buying financial assets, which had a claim on the profit because interest is a deduction from profit, which must be paid to them. And the consequence was you cannot understand the profit rate unless in the denominator, the assets do include finance capital. And if you do that, what you see, as this graph shows, is the rate of profit has declined continuously since 1946. And I'm sorry, people who think this is, some sort of dogmatic Marxism. No, these are facts. I could have said all of this without mentioning Marx once. These are facts. The rate of profit is declining. That is leading to a decline in productive investment. And the productive investment decline is producing the decline in growth. So, Radhika, you have to enter. What happens on my screen is when people enter the waiting room, I can no longer move the slideshow forward.
No, I'm admitting them. Don't worry. But just so you know, you are at 15 minutes now.
Okay, yeah, I won't be much longer. But now, of course, the same thing has happened and I'm stuck. Here we go. How is the US attempting to compensate for this? By taking it out on the rest of the world. This graph, since I'm on my 15 minutes, I won't spend long on. People have seen this before, much more than the other one. It's the ratio of the GDP per capita of the global south to that of the global north. And what you see in 1981 is a massive increase, a doubling of world inequality. That's inequality between nations. Because the US capitalists were trying to recover from the difficulty that they were in, caused by financialization and caused by the decline in productive investment, by getting it out of the rest of the world. Then what you see is in the year 2000, that starts to go down. Now, China is not included in this. I'm coming to China very shortly. But the point is, it was no longer possible for them to extract quite so much from the global south, which is one of the things producing the current crisis. It's not ended, but that's what's going on. So what do they try and do? They try and drive the growth rate of the other countries down to compensate for their own decline. The essence of the strategy of the United States is, since we can't grow, none of you buggers can. And that's what they're trying to do. There has been some consequence. They have recovered to some extent. This is the same graph with more recent growth data, and you can see the trend towards international inequality rising has continued, has resumed. And I think that the figures that Michael Roberts gave us, showing the disastrous performance of Brazil and South Africa, demonstrates what the effect of this war against the South has been. This is the exception that proves the rule. This is the same thing, but for China. And China is now only, GDP per capita is now only 5 times, well, this goes up to 2016, you can't see it, but it's only 5 times worse off than the United States and falling very rapidly, which is the catching up. And that's dangerous because it proves that everybody else can do it. And then I'm going to finish on one thing. Why is it that the South has not caught up? Because its real growth has exceeded that of the North certainly since 2001, but basically since 1989, and more or less since 1968. Why does this real growth not produce an improvement in the monetary position of the wages and inequality of those countries? It's very simple. The answer was given by the development economists. It was given by those who explained that unequal exchange is a fundamental mechanism of the world market. And I'm very pleased to see Michael Roberts draw attention to that and look forward to the book that he's producing with Lino Karpedi, who I've long tried to be working with on this very question. And it's very simple. Prebish and Singer explained it. You produce more and more, but the price goes down. That's it. You can produce as much as you like. You can double your output. But if the price of what you're selling halves, you are no better off than before. And that was what the neoliberal term was designed to do, it to turn the countries of the South into suppliers of basic goods, low wage goods, minerals, foodstuffs, and so on, and force them to overproduce. So the consequence was the prices collapsed, and that's what drove this inequality. And in fact, it's extraordinary because the result was by 1995 an almost complete division of the world into two parts. The imperialist world and the non-imperialist world. I'll finish on this. The vertical axis shows GDP per capita. The horizontal axis shows the price level in the country concerned. All the red dots are countries of the global South. All the crosses are countries of the global North. And you can see it's almost a precise division. All the poor countries, all the countries with low price levels are low income countries. This reproduces the imperialist division of the world that Lenin was referring to, but this time the cause is economic in almost the same proportions. So that's the reason that the US is declining. That's why it has to be stopped. And that's why I'm very convinced that China is showing the way that it can be stopped.
Thank you so much, Alan. I don't know about the rest of you, but my mind is absolutely buzzing with ideas and thoughts and questions and just really taking in all this wonderful analyses, all these wonderful analyses. And I think I would like to now invite questions. So those of you who would like to put questions, if you would please start raising your hands. And in the meantime, I would perhaps, I will just take some time to ask maybe all the panelists to do one thing, which is address each other's points as much as you wish to. And also, I'd like you to reflect on a few things. One is, you know, we are all dealing with statistics about American growth and so on. And I'd like all the speakers to reflect on the extent to which the growth in the United States, whether they think that growth in the United States is exaggerated by the fact that there is so much financial activity. And if so, by what extent? Roughly, obviously, you know, you may or may not have done statistics, but if not, at least give a rough indication of what that might be like. Because in that sense, I think that in many ways, particularly over the last dozen odd years and in the pandemic, so much of the efforts of the authorities has been directed towards securing the value of assets or value of financial assets. And we all know that has vastly exaggerated the wealth of the billionaires, which if there were a market correction would be corrected very quickly. But to what extent does it exaggerate the extent of growth in the United States? I'd like some comments on that. And secondly, I'd like you to comment on one other thing. You know, Alan ended, I think, very brilliantly on showing the connection between surplus extraction, price levels, etc. As some of you may know, Utsa and Prabhat Patnaik wrote a very brilliant book analyzing the mechanisms of imperialism, in which they underline the extent to which essentially the value of money in the first world, particularly of the dollar and other hard currencies, is kept up by depressing demand in the third world, so that the prices of commodities do not surge beyond the point where the value of first world commodities declines. I certainly think they are right. And of course, Michael, and many others have pointed to the extent to which Michael Hudson and many others have pointed to the extent to which since 1971, the US dollar's world role has relied on creating a financial demand for the dollar. So these are two mechanisms. Do you think there are other mechanisms? So if you would reflect on that. So those are my two questions. And maybe I will ask Lauren to put her questions, because I also thought they were very pertinent to all this. And then we will start with responses from Michael Hudson and go to the other panelists, and then take another round of questions. So Lauren, please go ahead.
Thank you. Well, these questions aren't so much related to the economics, this traditional economics metrics that you were all talking about, but there is that other index, the gross happiness index. And I was reading an article about what is called the Great Resignation in the United States and the laying down movement in China, which is where young people are just realizing that working away, spending so much time in their day at their jobs is really not what they want their life to look like. And then there's the question of growth, which, again, back to the GDP. I'm a climate activist, and a lot of climate scientists are sounding the alarm over this increasing growth, because it relies on maintaining a constant economy where you're producing and consuming things that you don't really, quote unquote, need. And a lot of climate scientists are saying we need to move to a degrowth economy. And I'm just, in order to be able to sustain livability on the planet. So I'm just wondering, since China is so thoughtful about everything they do, and they clearly are trying to address climate change and pollution, I'm wondering if there's any discussion in the government about these two phenomena.
Great. Thank you so much, Lauren. So Michael Hudson, we will begin with you and go to the other panelists. Meanwhile, as I requested, please raise your hands if you want to pose questions. There are wonderful chats going on in the wonderful conversations going on in the chat, but let's bring them out into words. So Michael Hudson, please go ahead.
Well, you quite rightly pointed to the composition of GDP, which is different. And you can't simply compare the gross GDP between America and China, because it's really gross national cost. The American GDP has soared last year for two reasons. The big contribution to GDP has been late fees and penalties by banks on debtors who were behind. That's called financial services in the GDP statistics. So when your credit card rates go up from 11% to 29%, that's called providing a financial service. About 8% of GDP is the homeowner's evaluation of the rent that they would have to pay themselves if they rented, as house prices are soaring. And there's because the upper 1% in America have made $1 trillion during the pandemic, they've been plowing this into buying property, outbidding owner-occupants, and turning an owner-occupied economy into a rental economy. We're now going back to the British situation before the reforms of the 19th century. And finally, as Alan pointed out, the military spending. It's important to realize that if you're talking about gross national cost, Pentagon capitalism, as my colleague Seymour Melman called it, has a different dynamic from industrial capitalism. In China and other countries, the idea of producing something, you want to compete by minimizing the cost of production. But all of American contracts with the Pentagon are cost plus. The more it costs, the more you make, because you simply add a 10% charge onto it. That's why you get $5,000 toilet seats. That's why you get the F-35 plane that doesn't fit. A lot of this is what I call empty GDP. Now, it's very hard to go into it takes about a year to go through the GDP statistics, but almost all of the GDP apparent growth that Alan produced in the chart is really fictitious growth. And just as you have fictitious capital, all of these financial claims that really cannot be paid, you have fictitious GDP. So if you look at the real economic competitiveness, China looks even more on the correct road. I want to say a final thing about what Alan said about the Thucydides trap. It wasn't a rivalry between Athens and Sparta over who's going to have more trade, who's going to be richer. It was a fight between democracy and oligarchy. Sparta was the oligarchy. It won. It put a client oligarchy, the 30 tyrants, in charge of Athens and after 404 BC when it won, just like America put in its client oligarchy in Russia in the form of the kleptocrats. And the oligarchy won. And ultimately, when there was a fight back by Sparta to cancel the debts and redistribute the land, the oligarchic neighbors called in Rome that wiped out Athens, leveled the city, destroyed it, destroyed Corinth, destroyed everything, and brought on the Dark Age. That's the context for the US-China Thucydides conflict.
Thanks, Michael. You are reminding us that you are also a scholar of the classical era and ancient societies. So thank you very much. Okay, other panelists to respond to Lauren's question as well as anything I said. If you would, anyone wants to go? Do I have any of the panelists wanting to go at this point?
Okay. Shall I?
Yes,
Shall
please,
I make
Michael.
a comment about?
Go ahead. Yeah. Yep.
Okay. Tang Ping, flying flat. It's a movement, isn't it, of young people who are seeking a more leisurely, less materialistic style of life, and whose aim is just to secure enough income to be able to live in a way in which they find satisfactory. But it's also associated with young people eschewing marriage and children, which is a serious issue, which is in fact quite common. I think the first thing one should say is that in part, this movement is a reaction to intense job competition in China. It's also a reaction to 996, working from 9 to 9, 6 days a week, which of course is being addressed in part through new labor laws. It's also a consequence of the very high cost of housing, and it's been associated with, to some extent, a rejection of some of the materialistic values that characterized China through the reform era. I think, it perhaps is one of the reasons for China's change of course. As far as the movement itself is concerned, it's very difficult to make any judgment about how large, how extensive it actually is. But clearly, it's in part a consequence of the characteristics of the previous phase of development. I think it's, in relation to it, one can say that some of these issues are being addressed. So the issue of work, the issue of labor compensation, the issue of housing costs. There are very, very large public public housing programs planned in order to start to address housing issues, for example. These reforms, would to some extent change the circumstances that have led to the emergence of this particular movement. But at the same time, I think China went from very, very high growth to much slower growth, and it's always argued that that choice of slower growth was actually a choice, because it was a choice that was associated with trying to find a higher quality path to development. So if a higher quality path to development obviously involves people living lives that in which they're happy, in which they can realize their potential. So in a sense, if China does succeed in moving in that direction, one might expect, the people who, in a sense, disengage from society to re-engage with it. I wanted to add that, if you do look at China, there are 500 million people still living in rural areas, and there are 270 million farmers. And even if you urbanize another 200 million, there's still 300 million living in the countryside. And there is basically a new rural vitalization movement, rural regeneration movement, in which many people will quite possibly move to the countryside and live in the countryside, as a result of very large investment in planned infrastructure, for example. The early rural development programs involved in providing basically 5 links, communication services, internet, and so on in administrative villages. In the next phase, it's going to put these services into every natural village. This rural reconstruction movement, it sees itself as being ecologically oriented. And China speaks about trying not just to construct rapid economic growth, but ecological civilization, and also about so-called spiritual civilization. And it's quite interesting if you read the document that was produced on the experimental zone in Zhejiang, where they're conducting experiments into policies to drive common prosperity. So I think the change in the character of growth in part reflects the sorts of problems that lead to the emergence of this particular movement. I could comment about the environmental side, but I just want to say one thing. To me, to say degrowth is a problematic notion. If you think about the extent of poverty and deprivation in the world in which we live, to start speaking about degrowth is something about which I would be concerned in many ways, because if you have to think that growth is really a question about the content of growth. Growth, you can have growth around health, education, producing a good living environment, producing an ecologically sound environment, protecting nature, addressing biodiversity issues. If you start to think, you should start to think about the content of growth and not about, in a sense, stopping growth.
Thanks very much, Mick. I think, Alan, you wanted to go next, and I'll give Michael Roberts a chance after that if he wants to comment, and then we'll go to the other questions.
Well, I have enormous sympathy with what Lauren is saying. I do not want to say that I see any counterposition between the arguments I put and the argument for a different mode and model and concept of human development. In fact, I'm a member of the Green Party of Canada. I'm also a member of an eco-socialist movement called Green Less Bush Vert, which emerged from the candidature of Dimitri Lascaris for the leadership of the Green Party. There are 2 points, however, I want to make. First of all, you cannot put China and the USA on a level playing field. But it's not the same thing, because there are people in China who cannot afford to lie flat. Half the population, because they don't have enough food. You have to develop the economy to the point where it can actually feed its own people. And also, unfortunately, stand up to the depredations and aggressions of the United States. So the question I would put is, what would create the best possibility for a completely different kind of growth? First of all, that the US simply disbands its army and ceases its financial and trade war against the global South and China, so they don't have to put all that work into building their own arms industry to defend themselves or develop themselves with the technology that the US refuses to let them have. That's the first thing you have to do. And second, when a country such as China does chart a different path, which allows its people to have the luxury of lying flat, then that should be supported too. I would say one further thing. I was responsible in the Greater London Authority for the creative industries policy. And one of the things that we noticed is that the creative industries are in fact the fastest growing industry in the UK by far. They're growing much faster than manufacturing in Canada. And I'm working with anybody else who wants to on comparing standards in the US, China and Canada of the growth of the creative industries. I don't think that's destructive, because the growth of the creative industries does not consume resources, or it doesn't have to. I mean, in some cases it does, but that's a misuse. It represents the growth of human potential, which is why education also is very important. And this goes in hand with the sustainability. I spent a lot of time discussing with some wonderful South African activists who have demonstrated that you can have growth of essentially of the spiritual and cultural capacities of humanity at the same time that you're decreasing the use that you make of the Earth's resources. That's possible. And in my opinion, they go hand in hand. So if you want to decrease the depletion of the planet's resources, the destructive effects of extractive modes of growth, you can have other modes of growth which are not necessarily destructive. So I would demur from any idea that all growth is wrong. The issue for me is what is the type of growth? Does it decouple material degradation, and does it increase the capacities, as Amartya Sen puts it, and capabilities of the working people of the world? So that was I'm not going to answer those questions, I'm afraid, because I'll monopolise the entire time of the discussion if I do that. And I'm not even going to answer Michael's question to say one thing. Athens was an imperialist power. Don't forget that.
Thank you, Alan. Michael Roberts, would you like to say anything? You are muted.
No, I think we should get on to some other questions. Otherwise, we are hogging everything here. We've had one.
Okay. All right, lovely. So I think we will take the next two questions and then send it back to the panelists. So Brian, please go ahead.
Well said, Michael. Look, on the eve of Pearl Harbor, the American or North American industrial capacity was 3 times that of Japan. Today, in 2022, China's industrial capacity is 3 times that of the United States. And what wins wars in the end is industry. So I don't think we should get too wrapped up in GDP figures, because, to be honest, 20% of US GDP is just sheer crap. It's duplications, it's all kinds of nonsense. Okay, the question I'm leading up to is this. We are seeing an international restructuring of the International Division of Labor, possibly the fracturing of this division of labor, which has emerged since the 1980s, into 2 architectures, one led by China, the other by the United States. Now, given the backdrop, and this is so important, the rate of profit began to fall in 2013 and 2014 in both the United States and in China. And it is this fall in the rate of profit, which I really don't think we need to discuss further back in history than that, because we have to discuss what is really the forces driving everything today. So that fall in the rate of profit, which is unprecedented, because up until all the subsidies in the United States, we had 8 years of continuous fall in non-financial corporations' rate of profit. Now, if anybody has read my website, they will know that I refer to 2015, 2016 as the pseudo recession that should have happened, but didn't happen because of monetary policy. But it is that fall in global profitability that has driven the tensions between the United States and China. And people who preoccupy themselves with financialization fail to see that the imperative of US imperialism is to maintain its technical hegemony of the world supply chains. it wasn't the Plaza Accord that destroyed Japan. In the end, it was the Pentagon working with US industry that created the information age that resurrected the United States and propelled it into supremacy. And that supremacy is being challenged. And Hawaii learned to its cost what that really means. The world's largest company, Apple, today is only there because of the crushing of Hawaii. So my question to the panel is this. Given that the international supply chains are breaking down, and we can see the fabs being built in the United States, Europe, and elsewhere, that is obviously going in the longer term to raise the cost of production and cost price. What do you think that the effect will be on world profitability as a result of this massive restructuring of global supply chains and the International Division of Labor, which I'll conclude on the following statement, is an awful, monumental waste of the labor time of the international working class?
Thanks so much. That's a great question, Brian. Fernando, please go ahead.
Well, I'm just a little bit intrigued about something. I attended to, for the second time, an interview with the daughter of Chico Mendes. You know what Chico Mendes is, right? Ilsamar.
You are referring to the environmental activist in the Amazon who lost his life back in the late 80s.
Yeah, was assassinated. Now, she's an activist, and she gave a long interview. The second time I see that there was a different one, where she is talking about, of course, the devastation of the Amazon and also other parts of the world, which she sees that the danger, the basic issue is this issue of production, and we are talking about growth. And in fact, what she's saying, what you have to do is to change the system, the economic system. Because if the economic system doesn't change, and whether it is China or whether it's United States or whoever, the devastation of the earth is going to continue. And then she was giving very, very, what I found outstanding statistics about how this planet is collapsing everywhere ecologically. And we continue to talk about growth. So Alan says there are maybe other forms of how do you say, of growth. Well, maybe we could talk about that, because I think that the central issue here, besides all economic models, it doesn't matter to me what the statistics are there. What it matters is that if we continue with the same model of production and consuming and devastating the planet, which cannot take it anymore, then we're done anyway. It doesn't matter who wins.
Thanks, Fernando. That's also really great. And overlap.
Sorry, and that's what Laura was, I think, addressing too. You know,
Lauren. Yeah, thank you.
It's a key issue, really.
Great. Thanks, everyone. And so, who would like to go first from the panelists?
Well, I'll just say a quick word on this key question of climate change and the destruction of nature and the planet. China is the biggest emitter of carbon CO2 in the world. India is behind that. But of course, if we look at it per capita, they are quite low. Then the US and the advanced capitalist countries are way higher per capita. Somebody made the point to me, well, that's no good. Who cares what it is per capita? The fact is that that's where the bulk of emissions are coming from, and that is what it has to be dealt with. That's true. Also, but it is worth remembering that emissions sit up in the atmosphere and in the water. They don't go away. And for the last 150 years since industrialization, the biggest emitters, accumulated emitters, are the imperialist countries. They have the record of driving up the level of CO2 to the figures we see now in global temperature. The new emitters, if you like, of the global south as they industrialize, of course, are adding to that. And the larger they are, the more they are adding to it. So the question we have to ask ourselves here, and the dichotomy is, how do we turn this down, save the planet, reduce emissions, save the world from entering a horrific level of global warming and temperature, and at the same time, take forward the billions of people, 3.5 to 4 billion people living in poverty in this world, who need more things. We may not need more TVs, but some people need a house, some people need decent water, some people need basic goods and services that must be provided. And that means a certain level of growth will be inevitable in those countries. How do we turn that around? Well, my answer to that is that we have to have a complete, I think as Fernando put it, we need a different model of production, which is what the argument is about. We're going to have production. What sort of model are we going to have? As Alan said, we're going to have a model for reducing military spending, financial sector, massive expansion of all sorts of fossil fuels and other things without any controls, without any reduction of that. No, if that goes ahead, and this is what happened over the last 50 years and will continue to happen despite COP 20, 21, 22, 23, 24, 26, it's still not under control. It requires a complete transformation of the mode of production for social need, not for the profit of the big energy companies and fossil fuel companies and all the other companies that are sucking and creating all this carbon emissions. Yes, China must reduce its emissions. Yes, the global south must reduce its emissions. It can do that if we had a world cooperation to do that, to shift the finances and resources to these countries so that they can carry out the defossilization of their countries. And the whole, on the world scale, we need to get rid of the fossil fuel industry. It's got to go. It's got to be ended. We need to develop dramatically alternative renewable sources of energy which exist and the technologies that can be developed and expanded. Instead of spending trillions on military expenditure and more oil exploration, we could spend trillions on environmentally renewable energy and other measures to save the planet and so on. In that sense, we'll grow, but we grow in a completely different model. And I think that's the way I would pose it, rather than the question of saying, just stop. We can't stop. There's 3.5 billion people out there. If you stop, they're going to die, along with the nature that's going down as well. They have to preserve nature too. People are out there cultivating nature. That's going to go down. It's got to be a method of revising the mode of production and the social relations, ending the inequalities that exist between North and South and between countries. That's what we need. So very simply, we need to get rid of capitalism and imperialism, because otherwise we're not going to solve this problem.
Thanks very much, Michael.
Thank you very much.
Anyone else? Any of the other panelists would like to respond to this? Yes, Michael,
comment?
please.
I mean, Brian made some very interesting and important points. And it clearly is the case that the United States, in a sense, controls much of the intellectual property associated with the last industrial revolution. And that includes, for example, its control over semiconductor technologies. As Brian pointed out, the United States is, in a sense, seeking to move much of capability in those sectors back into the United States, and is using its leverage, as a core instrument in its attempt to prevent China from making technological progress. It is, however, a very risky course of action. I mean, in 2011, the United States had China removed from the International Space Station in order to prevent China from making progress in terms of space research. Since then, China has landed a rover on the dark side of the moon. It's landed a rover on Mars, and it has its own space station, manned space station. So, if we come to this question of semiconductors, I mean, China is engaging present in massive support for the development of semiconductor industry, and it's quite likely that it's going to be able to produce integrated circuits of type domestically, of the type that are used by in artificial intelligence, that are used in autonomous devices, and the kind of Internet of everything, if you like. So, China's aim is, in a sense, to end, its dependence on the United States. Now, that's a real problem for the United States because although the United States wants to control the top end, it also produces other devices and it needs markets for those devices. And the largest market is actually the Chinese market. So if it loses that market, then it loses revenue. The profitability of these enterprises becomes more questionable, and their ability to finance new research and development will be placed in question. So I think that what the United States is doing, by not refusing to collaborate, in a sense to use semiconductors in order to sanction China, is embarking on a course which may actually accelerate, its relative loss of position in those sectors. I mentioned that there's very strong emphasis upon the need in relation to this new industrial revolution for international collaboration, and that's in a sense what China calls for. Okay, and that in a sense is my response. So I do think that China will make progress in relation to these sectors, and hopefully, the progress that it makes will ultimately be shared, at least with those countries, that are more oriented towards human progress, than is the United States.
Mm-hmm. Do any of the other panelists want to come in now, or would you prefer to wait?
This point dovetails with what Brian said. Brian used the word international division of labor, but think of it as the international division of infrastructure, because that really is what is creating productivity. Well, of course, there are two kinds of infrastructure. There's government infrastructure, as Alan was pointing out, which is what made American industry so productive. But there's privatized infrastructure to make the economy look like Margaret Thatcher's England or the United States. So you could say there's an international division between economic rent-seeking nations trying to make money by finance, insurance, and industry, and industrial labor nations trying to make actual output. So again, we're back to the whole function of GDP. And if you're talking about either climate or other, what economists dismisses externalities, meaning we don't talk about that because it's not about making profit, then you get back to the government-private sector relations, which have different objectives. The objective of government investment is to lower the cost of living and doing business. The objective of private infrastructure investment is to increase prices, economic rent, and raise the cost of living and doing business. That's the division of the world.
Thanks, Michael. Any of the other panelists would like to go? No? Okay. I would want to go to the next two questions, but I just wanted to make two remarks myself, because I think they're really, the questions that were raised by Brian and Fernando and Laura were really quite important. And I just wanted to say two things very quickly. Number one, Michael pointed to the empty GDP. And I think it's very critical that people who have the statistical ability start producing estimates of empty GDP. I think, Brian, you mentioned that roughly 20% of American GDP is just crap, etc. So you are giving a quantitative number to that. And I think it's important to do that for one very critical reason, because it really, the solution to the environmental issue is that we all have better lives, more secure lives, the important things in life, food, housing, education, transport, culture, etc., without it be destroying the planet. And if we are going to do this, then, and I think it's possible to do this in a way that also involves redistributing work and its rewards, etc. But if we are going to do this, we have to stop the worship of American GDP. And this is a critical way of stopping that. The second thing is, I think Brian also raised an important point, but I would like to come at it from a different point of view. The point about technology is critically important. But in a capitalist context, technology is constantly being generated that does not add to human welfare. Think about this. When America had its Sputnik moment, what did it do? It spent enormous amounts of money putting man on the moon, which was a completely useless stunt, whereas satellites are critically important. So we have to expose these empty technologies. Right now, we have technologies that are being generated, but what's being called technological leadership is actually not adding to human welfare. The technological leadership of the United States, the kind of software giants and whatever these internet giants it is producing is not adding to human welfare. If anything, it is distracting from human welfare. So I think these things have to be focused on. And if we do that, it will become very clear that the system change that we want to talk about is already taking place. The elements of it are already there. Major elements are there in China. So that's what we have to focus on. Now, I will go to the next set of questions. I will take all three together. Please obviously keep them brief, but I will go to Jenny, then Michael, then Fernando.
Thanks, Radhika. I've heard some figures being bandied around in China that the intention is to spend $72 trillion on its green transition by 2050. That seems like an enormous sum of money to me. I'm not an economist, but it looks like it's 3.5 times the size of the US economy as it's stated at the moment. I'm wondering where the money is going to come from to finance this. I'm wondering whether China's financial reforms and the loosening of its capital markets is linked in any way to these enormous sums of money for green transition, and whether the reforms in China's financial markets will be drawing finance out of the speculation in the financialized economy that we've been talking about into productive investment. And if that is so, can we, we should be talking about not only the models of different models of economic growth that we've been talking about, but also different models of production that we've been talking about, but also different models of finance. And so that leads on to my question also, is can we talk about, or how should we talk about socialist capital markets?
Thanks, Jenny. Michael.
Yeah, I just wanted to raise some questions about some of the graphs that were shown by Michael Roberts and by Alan, and because some questions occurred to me about that. So first of all, I'd like to say that I mean, I'm not an economist, so forgive me if I'm saying something which is not sensible, but I get the impression that when people talk about growth, they fail to see the historical thing that, if you have a given amount of growth today with a certain amount of investment, to have maintain the same amount of growth in 5 years' time, it takes a lot more investment in order to do that, because the amount of growth to raise the amount of investment required to raise growth by 1 percentage points increases over a period of time. And so I think that's any nation which has an importance, attaches an importance to investment, as opposed to other means of achieving growth, is going to win out in the long term. Now, Michael Roberts showed a graph which indicated that China had reached peak population. And so I think that there are population issues there which for the future of China's economy. Although it has to be said that there are still very large numbers of rural population which stand to be urbanized, and so therefore contribute greater levels of productivity. In the United States, the recent census demonstrated that whilst they haven't reached peak population, they are very quickly approaching peak population, and so that same issue will occur to the United States. However, I think the current situation is about 83% of America's population live in urban areas, metropolitan areas. So they don't
Michael,
have
your question.
Yeah. So the question is, given these things, I mean, does that not indicate that China has a much more advantageous position going into the future in terms of its ability to maintain its its economic development, in opposed to the situation that we have in the United States, which doesn't have as high levels of investment and less of a future in terms of its population. And in Europe, where Germany, for instance, I mean, I think it's quite general across Europe. In Germany, the reproduction rate is about 1.3 children per woman. So that means that the population in Europe is fast going to approach peak population. So I was just wondering if what are those indications for the future?
Thanks, Michael. Fernanda.
I don't have a question. I just want to add something I forgot to mention about the interview of Ilsamar Mendez, is that she said the only solution for saving the planet is to get rid of capitalism.
Thank you. I think, yeah, there will be very little disagreement here on that. Okay, I will go to the panelists now. And I just wanted to say that unless there are any other questions, this will be the last round of questions. If there are questions, we'll take one more, but not more. So, Alan, you go ahead, please. And panelists, let me know if you want to go next, but otherwise I will just call on you in.
First, this has been an extremely rich discussion, and it's not been possible for us as panelists to do justice to the questions that have been asked. I'm certainly willing, if anybody wishes to send me an email to reply to any questions that people may have. I think what we're all about here in the Manifesto Group is collaboration. I want to add a couple of points which I think are very important. This was about US and China, who is winning. But climate change will not be defeated by the victory of any summit. It will only be defeated by the victory of the human race. So I think this became particularly clear with the pandemic, where I think, to me, what was the most shocking and disgusting thing about the pandemic is the race of the big pharmacological companies to profit from the misery and death of the world by selling their vaccines at exorbitant prices. Their refusal to let people use the vaccines and medical support provided by countries like Cuba or China or Russia. So they turn what should be an attempt to make a world approach to things into a private means of making gains. And so the real problem with climate change for me is that there has to be a common endeavor. What's the use of China? I mean, China is reducing its emissions. It will. It's setting a model for the world. What's the use of that if America doesn't do it too? What's the use of it? It's not going to solve the problem. So I think one of the things that China is doing, which we've only slightly touched on, is it also has a different model of the world economy. And it has a different model of world collaboration. The crucial thing to me about the Silk Road, Belt and Road Initiative is that it's based on a very different model, actually, from both the USA and also from Russia. It's not a spirit of influence. They will deal with any country on the basis of whatever their politics are, on the basis of what they see as equal commercial relations. But underlying that is a commitment to build up human capacity in those countries. One of the most interesting things about Chinese investment in other countries that I've discussed with activists in those countries is that they are investing equal amounts in education and health to what they're investing in infrastructure, because they're interested in what they consider to be human infrastructure. Now, human infrastructure, this leads me on to my second point, is actually the technology of the future. I'm software. I work in software. It's 1965. The first computer I worked on had valves and keys and switches, right? So the speed at which the software industry is transforming is extraordinary. And by the way, it's almost entirely dominated by Russians. So God knows why the Pentagon allows that, but it is. I mean, some of them are, of course, expatriate Russians. But the reason for that is very simple, that in the USSR, the only thing that you could do when the whole capacity of the USSR was destroyed by the USA is to use your wits. So you can do software with a pencil, right? The mathematical achievements of Soviet science are unparalleled to this day. Some of the major textbooks on physics come actually from Russian writers. And we're still catching up with many of the most fundamental discoveries of Russian mathematicians. This consumes nothing. All it consumes is what you need to eat. But this is one of the fastest growing industries in the world, in every country. So I don't see anything wrong in investing in the growth of software. And this is not something that is postponed to a dim and distant future. It's happening now. I don't know if people know this, but if you look at the share of manufacturing employment in the US economy as a whole, and this is not skeleton economy or anything, this is what people do as a job. Only 14% of the US workforce work in manufacturing. 86% is service production. And the areas that are expanding are not what you think. You might think, oh, it's finance. No, financial employment's declining. What's growing is health, education, creative industries, software. This is a technological revolution that is going on in front of our very eyes. So that what we need to do is two things. One, as Michael eloquently puts it, bring everybody in the world up to the level of material well-being where they can participate in this new technology. That's human infrastructure. If people can't even eat, they're not going to be able to take part in sustainable growth. And secondly, see that when they are employed, that what they're employed in are things that are not destroying the environment, but rebuilding it, which I think the technology for that exists already. I think it's not the dim and distant future. So it can be done. And I want to insist, however, on one thing. There's an Irish joke which goes, the man in Limerick says, I want to know how to get to Dublin. And his interlocutor in Limerick says, well, if I wanted to get to Dublin, I wouldn't start from here. We are starting from here. There is no alternative to the material development of 4 million people who have been reduced to a condition of destitution and starvation by imperialism. And we have to bring them out of it. And China is doing that. So I think, therefore, that China offers the best opportunity, not for a socialist climate. You can't have a socialist climate bubble. You have to have a climate world. It's offering a world vision as well as just a vision of China. And we should all be responsible in our own countries to exercise the maximum pressure we can on our own government to take part in this, starting with the fact that they should consistently take part in the Kyoto Accords, which nobody's mentioned. The US persistently ducks in and out of any attempt to make a world agreement and have a world agreement stuck. So the world dimension is an important one. And one of the things is that I think that China is beginning to win the race to persuade people that you don't have to run the world the way that the US runs it. You're muted, Radhika.
Who would like to go next? I think, Michael Hudson, you probably want to say something in response to Jenny's question about China, financial systems in US, China, etc.
I actually was thinking about the climate change, that I had to say something on that. The most powerful industry in America is the oil industry. And American foreign policy for the last 100 years is based on oil. America insists that oil remain the fuel of the future. And that's why we invaded Iraq. It's why we invaded Syria. It's why we destroyed Libya. And it's why I was the economist for the government when they were wanting to develop the Athabasca tar sands in Canada. One of the advantages, they said, is that every gallon of artificial oil from the tar sands uses 4 gallons of water. And the Carter administration came in and said, this is great. We will create a drought in the United States. And that's wonderful. That'll increase the price of food, and the oil that we pay for the OPEC countries in the third world, we can raise the price, we can basically starve the third world. That will cure the population problem that we're talking about. It'll solidify American power. So American foreign policy is based on polluting the world. That is the business plan of the oil industry. It's the business plan of the government, and that has been unchanging since I began to work on national security things and with the oil industry since the 1960s.
Thank you, Michael. Who else would like to go next? Michael Roberts.
Well, I'll say, I can't really comment on Jenny's question. I mean, it's a very, very important question. I mean, the sum of money she spoke about is really quite extraordinary, but it's difficult to say what a system of socialist capital markets would look like. But I mean, it is quite clear, you know, that China's aim to reach peak carbon by 2030 and to be carbon neutral by 2060 involves very, very substantial investment. I just wanted to say that there are other aspects of this notion of ecological civilization that also involve very, very major investments. I went quite recently, you know, to a county, you know, in Anhui, and there's a very large lake. These fishermen lived on boats around the lake, and on the edge of the lake, you know, land was farmed using fertilizers. The fish in the lake were farmed. They catch crabs, but the crabs were caught, you know, basically using baits that seriously polluted the water. That lake's been transformed into a nature reserve. All the people who lived on boats have been rehoused on land. The fish and the crab are now basically wild caught. They're sold nationally, you know, on the internet, and they use Internet of Things monitoring systems. Now, if you put together all the bits and pieces, you know, that went into that transformation, you're talking even just in that one case, you know, of extraordinary levels of investment. So, you know, I think it gives an indication, you know, of the magnitude and nature of the kind of, and the difficulties, actually, the onerousness of the tasks that lie ahead. I wish I could answer Jenny's question, because, you know, the question about the way in which finance is mobilized in order to achieve these ends obviously is one that's of critical importance, but it's not a field in which, you know, I have any special expertise that perhaps I ought to know more than I do.
Well, I'd like to respond to Jenny's question very briefly. I think, Jenny, it's the dollar figures or money figures that you see are really just an indicator, because what the Chinese are going to do is not create money, not create credit. Their primary effort will be resource mobilization. And that's the sort of thing that the Mix example was talking about. That is, once you mobilize the resources, then you put a value on those resources. That's how these things are going to happen. It's not as though the Chinese financial system or monetary system is starting to generate this, because that's the reality. The reality is that the climate crisis will be addressed by mobilizing resources in the way that Mick just pointed out. Okay, I guess I'll give the final word to Michael Roberts, since he hasn't spoken yet in this round. So, Michael, please go ahead.
Well, I just wanted to say, Radhika and everybody, that we've raised a lot of global questions, not just a debate between where China and the US is going, question of the environment, the question of climate, the question of productivity, taking people out of poverty. And it seems to me we must remind ourselves as socialists that really this requires world action. We need international cooperation. And where's that cooperation? The foundation of it in terms of people. It's not going to come from the elites of the capitalist world, quite the opposite. They can't even cooperate on the question of COVID, let alone on dealing with these major issues which face working people. It's going to require the organization, international perspective on the part of working class movements, both in America and the other imperialist countries and in China. China has given us a model for growth for the global south, which succeeds. And we've discussed to some extent how that has succeeded and why it has succeeded. But that's not enough. China cannot achieve full prosperity for its own population or for the world unless we have an international perspective. We need international cooperation on the fossil fuel industry, on climate, on the environment, on productivity, on meeting the poverty levels that exist around the world. China cannot do it on its own, and the imperialist countries are not doing it. So it requires the labor movements, the working class movements of both China and the imperialist countries to come together to do that. That's the task, it seems to me, that's before us, having had this discussion.
Thank you so much, Michael. I don't think there are better words to close this amazing, I think, very, very important session. I would like to close by making a couple of remarks. So first of all, let me say that if you agree with what Michael said, you will also agree very much with the content of the manifesto through pluripolarity towards socialism, which you will find on the website that I've just shared. Thank you to all the speakers for fantastic, extremely thought-provoking presentations. Thank you to all those who attended and asked questions and kept up this amazing conversation in the chat about what, as Michael Roberts pointed out, what are really fundamental issues facing the world today. I would like to now bring this session to a close, but before doing that, may I request the 4 panelists to remain on this so that we can briefly have a chat about how best to propagate this wonderful session. And for the rest, I would like to say goodbye to you all, and please leave as you can. And this video, by the way, if you want to share it, is already on YouTube, so please feel free to share it. It's on the Geopolitical Economy channel. So thank you again, everyone, and goodbye.
Okay.
Actually, what I'm going to do, panelists, is I'm going to end the session, and I ask you all to rejoin it. Or no, I don't know whether